Business expenses with trader tax status. Traders qualifying for trader tax status, TTS, use business expense treatment. Before 2018, investors who did not have trader tax status, they were able to deduct investment expenses as miscellaneous itemized deductions subject to various limitations, like the 2% AGI limitation, AMT preferences, and more. Then the Tax Cuts and Jobs Act came along and suspended all miscellaneous itemized deductions, including investment expenses, between 2018 and 2025. So there's no more investment expense deductions for regular tax, which makes TTS business expense treatment more crucial than ever before. You can claim business expense treatment if you qualify. That's good news. If you're preparing your 2017 tax return on extension, you can still claim it by adding a Schedule C for your trading business expenses. You can even go up to 3 prior years that are open tax years to amend tax returns to report business expense treatment, which could save you some nice tax money. Unlike Section 475 mark-to-market accounting, which existing individual taxpayers must elect by April 15th of the current year, traders can claim TTS business expense treatment after the fact, based on facts and circumstances. You don't make an election for business expense treatment because, after all, you could elect but then not qualify. It's sort of like putting the bread in the oven. If it rises to bread, you have trader tax status. If it doesn't rise, it's flatbread and you don't have trader tax status. Now, if you're just learning about TTS, you might still be in luck for 2017 and 2018. Business expenses include tangible personal property up to $2,500 per item. So if you buy a new computer for $2,000, you don't have to depreciate it. It's a tangible property expense under the safe harbor election. Next, Section 179, 100% depreciation. If you buy a computer workstation for $4,000, it's more than $2,500, so you can't take the tangible personal property expense. You can take Section 179, 100% depreciation. That requires income either from a job or from the trading business. If you don't qualify for Section 179, then take bonus or regular depreciation, still very favorable. Amortization of startup costs. That's Section 195. There's also amortization of organization costs, Section 248. And amortization of software. Now, Section 195 and Section 248, you can capitalize a reasonable amount, let's say up to $15,000, have the expense allowance up to $5,000 the first year, and the rest over 15 years straight line. Next, education expenses paid and courses taken after commencement of TTS. So first you qualify, then you take the education. It's a full business deduction. Otherwise, if you take the education before you qualify, it's pre-business education and it may not be deductible, or we have a good idea, squeeze it into Section 195 startup costs, and then get that amortization as previously explained. You also may use the accrual method and take classes before and after you commence to get some accrued expenses in the latter period. It's complex, and I cover that in my Trader Tax Guide. Business expenses also include publications, market data, professional services, chat rooms, mentors, coaches, supplies, phone, travel, seminars, conferences, assistants, and consultants. And there's many more expenses that I've left off the list. If you spend money and it directly relates to your trading business with trader tax status, it can be a business expense. One of the biggest ones is the home office expense for the business portion of your home, whether you own or rent. Margin interest expenses are a business deduction. Without trader tax status, it's an investment interest expense subject to investment income limitations and more. Stock borrow fees for short sellers, business expense. Internal use software for self-created automated trading systems. So you want to flush out all potential expenses, but keep in mind there are some expenses that don't qualify. Vehicles aren't usually deductible for at-home traders because traders don't need a car to visit clients or companies. Brokerage commissions are not business or investment expenses. They are deductible against trading gains and losses, so you don't report the brokerage commissions on Schedule C. They're deducted from your proceeds, added to your cost basis, and they're part of your trading gain or loss. Entertainment expenses were suspended under the new tax law. Trading business expenses are deductible from gross income, whereas the new tax law suspends investment expenses. Business expense treatment hinges on qualification for trader tax status. Fully expense most purchases in the first year.